Hey traders, Ryan here. Just going to quickly do a recap for SP500 and crude oil. Just going quickly into what happened on Friday. Obviously with the news coming out and sellers coming into the market. I mean, regardless of the news, I mean I was still looking short on this market from this area. So, and the news, if anything, just obviously helped my trade here, as it happened very fast, and I managed just to get in and out. Off of the open, obviously, I'm going to quickly run through this. I mean, you can see here the difference between today and yesterday. So today we opened right on top of yesterday's highest. Value was down, obviously. So this is one thing that's a little bit different. But again, look how we are quite far away from value, and we're quite far away from the previous higher day. So, and if we look at the higher time frame context, I mean, we were very far away from value. If we look at the weekly. The high we see put in, I mean, we're very far away from value. Not very far, sorry, we're pretty far away from the weekly value. We're well out of balance in the standard deviations. And if we look at the monthly, and this is the first pullback into last month's value, so we expect rejection, especially on this sort of bearish Vwap structure. So when the market comes back and tested its previous value, you're expected to find sellers here, and we did see sellers back to the month developing value, with obviously buyers pushing it back up. I mean, for a pretty light volume traded through here, and we had a gap up off the Globex Open this week, as you can see here. But again, we just basically rallied 60 points to last month's value, and I was looking short on this day, the way it opened. So obviously what I did is I just let the market open, and I let the market shake itself out. Obviously we let the initial balance come in. So initial balance came in on this day, and you can see it's just about, let's have a look quickly. It was a couple points above the overnight trade. I mean, the overnight trade was into the 59 half, and we see the high into 61. So I mean, there was, but when we look at this sort of activity, I mean, just because we traded through the overnight high doesn't mean we're going to see exception and a continued imbalance to the buy side. And when we run the stops, it doesn't have to be a point, it could be 3 points, it could be 4 points. It's just an area that I'm looking at. So in regards to that, just like I said, just because we don't hit the overnight high, just because I'm going to say I'm selling the overnight high doesn't mean I'm selling the actual overnight high. I'm just selling above the overnight high, looking for obviously rejection and acceptance back into range. So, but again, initial balance came in. We started to auction away from that previous day, putting in the range, and obviously the initial balance came in, and I was looking to sell above the initial balance back in. I mean, if we had broke out below, then I've been looking for shorts but because we tried to obviously expand higher, and we see absorption there, and we were so far away from value, I was looking for the market to come back in. If we do look at the composite, you can see here that this was the breakdown, this was the sell-in, this was into the 100-day moving average, and then we just see this pop up in very light volume. So we see this first distribution, and you can see that it was a pretty ugly trade here, so it looks like we need to come back and fill some trade out here. And then we had the 2-day upwards grind, and as you can see here, there was this perfect place to come back and fill in volume. Just poor trade here. So obviously the expectation for this to come back and put some volume in here is very high, and it's exactly what the market did. And in C period, we auctioned straight down to this point of control, and obviously from there we found buyers, and then we auctioned into the value area low. But as you can see here, we basically just filled out this distribution perfectly, and then obviously today we've opened gap higher, and we've seen buyers reject this back into the monthly value. But obviously in the higher time frame, what we see is basically a bounce up to the mean. We see sellers back from the mean down to, we didn't quite reach the value area low, but obviously that's the expectation with regards to how the auction works. So we see the value area low, we come back to the mean, we come back to the value area low, then we look for destination trades to the other side of value. I mean, this market was so out of balance on the other time frames that we never come back and tested the value area low here. But there was business done at this quarter's Vwap, and we're straight back to this quarter's Vpuck now. So interesting to see this happen. And obviously what happened here was the monthly development value prop prices up here at this 1937, and as you can see here, 1937. So as you can see here, all the time frames was correlated around each other, and obviously sometimes other scenarios don't play out because of the other time frame activity. But this is why monitoring all time frames is key to long-term trading consistency. and understanding how the patterns and the markets develop. But this is why obviously I got short on Friday, and I managed to catch this news that came out. I mean, I got short and I was lucky that this happened, but regardless, I was still looking short back into that previous day and into that previous value below us, because the market was so overbought from a macro perspective. So that's just that reason for why I caught that trade and how I caught it. I mean, at the time I was basically just selling above value with obviously stops. Obviously I can't have ridiculous stops, but obviously monitoring the auction, I got in a pretty good price above this previous high. So I mean, I didn't really take that much heat on the trade, and ended up working out pretty nice regards to the scenario that I was looking for on Friday with the S&P. I mean, continuing forward with the S&P here, I'm going to quickly do some analysis from obviously the higher time frames, as we're looking potentially pretty bullish here still, and potentially a new high possibly. I mean, from the monthly perspective, let me just get rid of this. From the monthly perspective, last month we see that spike top reversal sort of pattern, and the market sold off. But the market's come down to support now, and we found clear, obviously, buyers as they're squeezing the shorts out. So from a macro perspective, we're just basically seeing two-way trade and balance in the market, rotational in this upper distribution here. And I mean, there are a couple levels that are propping this up, and we're kind of on the weekly. We've found some resistance, and we're starting to one time frame back up to the highs on the weekly on the SPX. But if we look at the volume distributions here, all we basically saw was a pullback to the developing to the value area low. We came to a 50% retracement from these current fractals, and obviously the target expectation now is the 2100 possibly if we put a new high in and we continue to see an imbalance here. We could continue to see further two-way trade here, and we could obviously put a new high and find a seller and come back in and trade within this distribution range. We'll just have to see what happens here. But regards to the current structure and auction process on the SP500, I wouldn't be surprised to see a new all-time high put in here. I'm not going to say we're going to come to 2100 or we're going to continue to auction higher, but from the way we've seen this bounce off the 100 exponential moving average, then I'm expecting a possible test of the highs and further bracketing the two-way trade. I mean, I did obviously you got run through this the other day, that how many times we've come back and tested the 100 exponential moving average since we've seen this trend develop, and every time we've come back to the 100-day moving average, we've seen buyers responsive and we see a new high put in. So obviously this is the next pullback since the last pullback to that 100 exponential moving average. There was a good accumulation down here, and we've seen prices pop back up, and we're heading back towards the highs. So what would be key now is to see if we do put a new high in, obviously if we continue to balance the two-way trade here, and then try to break down below the 100, or we just see this trend just continue to develop to the buy side. Just obviously just have to see what happens here. But obviously the expectation at the minute is two-way trade and bracketing in the ranges that I just showed you on the macro pictures. So again, I would be expecting a possible new all-time high on the S&P now, and if once we've seen the all-time high, depends on how we see. I mean, there is some business back to be done below the 1900s with the poor low in Globex. We just have to see what happens here now. Regards to crude oil, just going to quickly run through crude oil quickly and show you what I did on the day. I mean, this is the rolled over contracts now for crude oil. Okay, I'm just going to quickly run through crude oil here and what I looking at on the day. And this is the back adjusted. I mean, I rolled over to the October contract today on crude oil, and missed the opportunity off the open here. I mean, off the open we opened just into the 5 exponential moving average, into yesterday's point of control. We're quite a big swing on Friday, back up to the previous day's highs from when we broke out of, and obviously today we opened quite far away from where we closed, and we opened below the point of control. And I just wasn't really looking to sell this off the open. I mean, the only thing that we had to work with was the point of control and the 5 exponential moving average. I was just looking for a possible swing up to the 9470s, which was at the timeline up with the developing value area higher. But we just didn't see that. There was just responsive sellers straight off the open, and we see almost a long liquidation profile coming to the market. I mean, whoever was getting long here, looks like they came in and they got business done, selling. Correcting some inventory. So I mean, we still haven't seen that excess spike below this B shape, but this is clearly a long liquidation profile here with some longs covering in the market. So Again, I just didn't nail this off the open, so what I did is I waited for this to break below the previous day's value. We came back down and we tested the previous day's lower day. Value caught up price, and I got short here with stops inside the initial balance at the time. And as you can see, it did work out quite nicely. We came down, we tested my first confidence area, I managed to get scaled, and two-way trades come back into the market, and I ended up just exiting on this break. So I pretty much got scratched for my runner, but I got my first and second target, no ads. So not a great day today. Shame I missed the trade off the open, but with the contract roll over here, we've just seen some funny price action. I mean, there's this is the previous contract, and this is the new contract. You can see there's about 270 ticks spread on the prices, so quite a big adjustment here on the spreads. Obviously, previously we were trading just at 96s, and now we're trading at 94s on the new October contract. So again, I didn't want to get too aggressive on the day today here, because I just wanted to make sure everything was correct with the data and progress forward obviously the rest of the week strongly. But yeah, that's just basically what I see today. I didn't trade the SP500. I just ended up just trading crude. I'm pushing forward on crude here. Pushing forward on crude. Obviously, we've come to last year's point of control now, and we've clearly got this this trading range here. So who knows? I mean, if we break below this $92 a barrel fractal there, I mean, there's not really much to reference down to the previous low of $85 a barrel now. So if we do manage to find sellers below this area, we don't find no buyers at this year's value area low, and we do happen to break below this 92 fractal, then it's pretty much game on to come down and test this $85 a barrel here. So just have to see what happens here. You can see this clear accumulation bracket forming, and the prices are getting pushed down on the 5 exponential moving average. So just depends obviously if we find a buyer here, we continue to break down below this $93 a barrel into lower levels. I mean, $94 a barrel was always the expectation from this higher to low, so the market's kind of reached its destination now from what I was looking at. So we're just going to have to let the market play out and see if we're going to see sellers and continued imbalance to the sell side, or whether we're going to see two-way trade come back in on the year and a destination trade back up to the year's highs and to clean up some of them upper levels. I mean, we still have last month's value untested, so this is our naked value area from last month from crude, and this quarter's developing value is still showing an imbalance to the buy side, sell side. So until we come back into last quarter's obviously it's value area low here, and we possibly see destination trade which will be back to that 100, then I'm looking for further breakdown, possibly below $93, $92 a barrel area, and see what happens. See what happens as we go from there. Anyway, as usual, if you do have any questions, please ask.